crackdown is coming on the payday loan industry. Federal regulators announced a new set of rules today designed to protect borrowers from falling into what critics call debt traps.
Lenders making short-term loans would be required to check up front whether the borrower can afford to pay the full amount of the payment when it comes due without needing to reborrow.
That's Richard Cordray, director of the Consumer Financial Protection Bureau and a former attorney general here in Ohio. There will also be a limit on the number of times lenders and borrowers can roll over loans into newer and pricier ones. Here in Ohio, lawmakers did create a set of restrictions for payday lenders, but these new federal rules will still have an impact. NBC4's Ted Hart joins us live to explain. Ted?
Yeah, Ellie, state lawmakers back in 2008 here in Ohio set interest rate limits on payday loan operations. But the short-term loan industry found ways around that. Now, though, these new federal regulations may put them in check. Some customers borrow against their next paycheck or their car title to get quick cash in a time of need.
There's 2 million people in Ohio that are unbanked or underbanked, and they use the products that short-term lenders provide because they need access to cash when their car breaks down, when they need to make their bills, when they need to go to the doctor.
But consumer groups say too often the borrowers fall into a debt spiral, repeatedly renewing their 14-day loans. And that's exactly what the businesses want.
They make their money on the fees that are associated with the repeat borrowing. So it's designed to be unaffordable because they want you to come in and keep paying them fees.
The federal regulations would limit the number of times a loan could be renewed and would require the lenders to verify a borrower's employment and their ability to repay.
But this is a great start.
Linda Cook says the new regulations don't go far enough. But Pat Crowley says they go too far and that the industry may not survive.
Most people use the product responsibly. They want to keep the product. They know what the fees are. The Bureau was put together to look out for consumers' protection. Well, eliminating a product that millions of people use is not doing that.
And Crowley says that the industry has a $1 billion impact on the Ohio economy and operates at a very low profit margins. But critics say that the industry makes huge profits on the backs of people who can least afford it. Live on the Northwest Side, Ted Hart, NBC4.